So pulling it all together, at the end of our process, we're trying to build a portfolio of companies here that cover a range of areas of interests that are all going to be structurally better off in a post-COVID world. Here we are looking for companies where we see significant acceleration in spending or acceleration in earnings, which would ultimately give us the returns that we're looking for in the future. As we look at the fund today, as we discussed, innovative health is really the number one position today. We do see healthcare spending as something that inevitably the planet is going to have to spend on aggressively, not just to test, not just for the vaccine, but also to prepare against future pandemics in the future. And so from our point of view, we've got a range of companies there that we think can win. Second area that's a really big focus is obviously cloud computing or digital enterprise. Clearly there is a large digital transformation that many corporates have already been going through, and lots of corporates are now going to have to catch up for as we move into a work from home environment, or even a roster on, roster off environment as we split into just more disparate teams around the world. And that's really going to favour these digital enterprise or these cloud computing companies. Digital payments and internet disruptions are areas that we've discussed a lot previously. And here we just see a number of new models coming through, or new innovations that are going to come along and really win the same way as some of their predecessors did. Spotify being a good example here. And the last two areas we wanted to focus on really around that high performance computing and climate change. In high performance computing, we're really looking at the semiconductors, which are ultimately the key weapons manufacturers in these technology wars that are going to continue. And lastly, there's climate change. Look, climate is building into being one of our bigger areas in the funds. As you know, we look for these S-curves of opportunities, and the decarbonisation of the planet is really right at the start. So this is a very nascent area for us where you'll see a lot of holdings, but not many investments, because we're really trying to build confidence in some of these ideas, because ultimately we're looking for them to be the big winners of the future as we move forward to try and decarbonise the planet. But putting it together, all of these areas, we should see strong structural growth in the years ahead. If we've done our work right, there'll be many companies within this area that should see strong structural earnings growth, which will equal strong structural share price growth. There will be some mistakes, and ultimately we rely on our risk controls to clean that out. But ultimately that should lead us towards achieving our goals for our clients.